Good morning and welcome to Business Morning on Channels Television. I'm Ini John Mekwa. Well, just before we get into the show proper, let's give you the latest from the world of business. The total value of capital importation into Nigeria dipped by 54.06% to $875.62 million in the second quarter of this year, compared to $1.91 billion recorded in the first quarter. According to the latest report released by the National Bureau of Statistics, the largest amount of foreign investments by type was received through portfolio investments, which accounted for $551.37 million for 62.97% of total capital importation. Lagos State emerged as the top destination of capital investment in the second quarter with $780.06 million, while the United Kingdom emerged as the top source of capital investments in the country with $310.26 million within the period. Last year, Nigeria's capital importation fell to its lowest level in 4 years as it plunged by 59.65% to $9.68 billion. And the National Sugar Development Council have highlighted steps taken to achieve self-sufficiency in the local production of sugar. The Executive Secretary of the agency, who stated this at the presentation of the Quality Management System Certificate to the Council by the Standards Organization of Nigeria in Abuja, explains that the attainment of self-sufficiency will bridge the gap in industrial and domestic sugar consumption. Mr. Adedeji further assures Nigerians of the agency's commitment to quality service delivery. Let's hear him.
As a forward-thinking agency that is desirous of offering effective and efficient service to our numerous customers, the Council is deeply committed to embracing and imbibing globally tested initiatives and practices that will assist in achieving its mandates, which is to revitalize the sugar sector and for Nigeria to attain self-sufficiency in local sugar production. A lot has been achieved in this regard, especially as it relates to the refining of raw sugar. But we are all out now to do more to develop the agricultural aspect of our backward integration program. The Council is committed to realizing these noble objectives, hence our determination to work closely with the partner like SON to improve our processes. The Council is committed to putting in place measures that will make the sugar sector to be more business-friendly, professional, and transparent in the discharge of our statutory responsibilities.
And about a month after the draft of the supplementary budget was sent to the National Assembly, it's gone through the due process and has now been signed into law by the President, President Muhammadu Buhari. Well, the budget is for the procurement of equipment for the military and medical infrastructure, as well as COVID-19 vaccines. About 722.40 billion naira will be borrowed once again. The discussion on the country's debt stock comes to play here. Well, we have Jolomi Odoganro, the head research and strategy at Quadra Securities Limited, joining us to share his thoughts on the implication of the supplementary budget. Good morning, Jolomi. Thank you so much for joining us. All right. Do we have Jolomi there?
Yes.
Okay, all right, cool. So the president recently passed the supplementary budget into law, which shows that about 722.40 billion would be borrowed. Do you see a rise in the level of domestic borrowings as a result of this? I mean, we've been talking about the debt stock of the country for a while now.
Yes, looking at the supplementary budget, what was passed was about 895.84 billion to be apportioned across purchase of COVID-19 vaccines. About 84 billion was apportioned to that, for 41 billion for salaries and other health-related expenditure, around 48 billion for recurrent expenditure on defense and security, while 722.4 billion was also apportioned for capital expenditure on defense and security. Now, looking at the sourcing of the financing for this, we have an existing World Bank loan where we expect to get about $113.2 million. And borrowings from also the special reserve levy account of about 135 billion naira, where we now expect about 722.53 billion to be borrowed domestically. So looking at the domestic borrowing stock we had for the year, what we expected to borrow domestically based on the budget was around 2.34 trillion naira. So if you add the 722 billion, that brings us to around 3.6 trillion naira. So looking at the domestic debt stock and what we borrowed so far in the year, I mean, based on the original number of 2.34 trillion, we had borrowed, let's say, around 67% of that as of the end of June. But adding this in and looking at where the borrowings are going to be for the rest of the year, we expect borrowing levels to settle at around 130 billion monthly. However, you also have to take into account the January 2022 bond maturing, which is around 605 billion naira, which is going to be refinanced. And taking that into context, we expect monthly borrowings at the run rate to be around 250 billion, which is quite significant. And which is quite significant and obviously increases the overall debt stock or debt borrowings, debt instruments that will be issued over the rest of the year.
So should we be worried? I mean, a lot of analysts have said it's not really a problem about the borrowing. It's actually what it's used for. And when we see the proposed use of this, COVID-19 is a global pandemic and the health sector actually needs fund. And of course, security has hampered a lot of economic activities. So these are necessities. Should we be worried, or are we just on the right track with this supplementary budget, hoping that the impact of the supplementary budget will also take care of, this issue of the debt and the rising debt stock?
So looking at the supplementary budget now and looking at the uses, one of the reasons that you tend to have a lot of worry when you have such an increasing debt stock is about whether or not it's being used for productive, or rather the uses for things that will produce or productive means. So basically, if you spend and it generates no income or financing that you're going to use to service the debt over time, it's problematic. However, like you rightly mentioned, if you look at the uses of this financing, I would say that it's going to overall improve economic activities. We've had a lot of issues around insecurity in the country that is obviously affecting food inflation and other economic activities. With the pandemic, we have no choice. We need to vaccinate a large proportion of the population. Right now, only about 1.23% of the Nigerian population has been vaccinated. And that has implications for economic activities going forward. I mean, if we enter a third wave or you're having issues around the movement of goods and people across the world, if we are seen as a high risk area, that is negative overall. So looking at the supplementary budget on its own and the uses of the financing, I would say that it's wholly positive. The issues we tend to have is looking at debt servicing to revenue. Over the first 5 months of the year, debt servicing to revenue was about 97.8%, which is quite dial. That is, for every 100 naira, 97.8 is being used to service debt. There can be no development if that is the use of all financing that comes in. So that is the real worry. However, looking at supplementary, like I mentioned, it's wholly, I would say this is a positive step.
All right. So we hope that we can improve our revenue, so at least that worry about the debt to revenue would, not really be there. But given that the supplementary budget would widen the fiscal deficit for the rest of the year, what impacts do you think it would have on the fixed income market?
I mean, it's quite an interesting one. So we've seen yields rise significantly during the year and now sort of tapered off and sort of leveled out. And we had reasons why we believe this had happened. You had basically the government trying to raise a significant amount of money through securitization of the Ways and Means balance, which obviously prompted them trying to have yields at a certain level. Looking at the overall liquidity in the market right now and looking at the amount the government still needs to borrow, one would say that yields should ordinarily trend upwards, given that they would need to borrow significantly in the markets. But there are certain things that may counter this. We've already seen one, the injunction in the courts just a few days ago, which basically stops the government from borrowing from unclaimed dividends and dormant account balances. That was pushed, it was in the Finance Act of 2020, and that would have reduced the overall pressure on the government to come to the market to borrow. But given that it may still come back, but right now it seems that that's out of the way. Then you also have foreign borrowings that may come in and obviously ease the pressure for the government having to come into the market to borrow substantially. But if you look up on the face of it, where we are today, not taking into account other factors that may come in later, 250 billion in this liquidity environment means that you should ordinarily trend upwards from this point.
And the National Assembly has also approved $6.10 billion for external borrowing requests. What is the status of the Eurobond issuance? How do we expect the Eurobond issuance to influence the FX reserve?
Looking at that, we've been waiting for the Senate to give approval for the external borrowings for quite a while, which we expect about 3 to 4 billion will come from the Eurobond market. And that would be positive. Looking at the reserve levels and looking at what we expect from crude oil receipts, non-oil receipts, non-crude oil receipts, also looking at the outflows leg, taking into account, like I mentioned, 3 to 4 billion from Eurobond issuance, we expect the reserve levels to settle at $38.98 billion by the end of the year, which is positive. And looking at, it's positive from where we stand, and also allows the CBN gives them a lot of ammunition to basically support the currency at a certain level. But it also brings me back to my point around where the fixed income yields may go from this point. I mentioned foreign borrowings. So if you look at the foreign borrowings, there's 6.1 billion taking it against the INE window rate, which hasn't been adopted as the official rate. That means the foreign borrowings are completely taken out, and it actually eats in a bit into the domestic side as well, which could also impact the yield trends in the markets. But for now, like I said, we don't take into account all of that. But looking at the reserve level as a standalone, it's going to be quite positive. And like I mentioned, we expect a reserve level of approximately 39 billion by the end of the year.
And what direction do you see the parallel market exchange rate?
It's quite interesting now because of the happenings in the parallel market. Prior to now, we had expected a bit of respite in that market as foreign borrowers came in, and CBN would now be able to supply the market substantially. However, from the MPC, when directive was given to basically stop sales to the BDCs, that sort of changes our views, because there's still a substantial amount of demand at that segment of the market, which is partly supplied by CBN on a weekly basis through sales. Sales have not been as frequent as they've been in the past, given the low liquidity position of the level of the reserves at the current time. But there's still a substantial amount of demand in that market, and what we've seen is the rates start to trend upwards. In a day, we went from 505. A sell rate to 515, and on the sell side 523 naira. So for us, we see a lot of pressure on that segment of the market until we see the impact of CBN's directives for banks that have tellers to sell directly to the retail segment of the market. Demand goes way beyond what the CBN has typically sold. So you still have to see how that goes. But for us, we're going to see way more pressure until something is done to significantly reduce or to significantly supply the retail segment of the market.
But let me get your thoughts, on the decision by the CBN. I mean concerning the BDCs, selling FX to them directly, the ban and everything like that. Do you see this solving the scarcity problem in that space?
I mean, it's not going to solve. It's from one perspective, you can understand why the CBN has an issue with the trend in that market. Obviously, a lot is influenced in that segment of the market, and they want to be able to control the overall narrative. But the truth is that that segment of the market contributes significantly to the overall supply in the market, and they require to a significant degree CBN to supply that segment of the market. That segment of the market has importers of 44 items that have been excluded from the official list. It has the retail segment, people that send allowance to their kids, accommodation fees, and so much more in that segment of the market. And so taking away supply from that market is going to significantly pressure the exchange rates at the parallel segment of the market. One of the only ways that you can obviously offset this is to significantly supply through the retail segment of the market through the banks, which is the directive that's come now to make sure that tellers in every bank in banks are available to sell FX to anyone that has proper documentation. But what we've had in prior to now is there are limits on what can be obtained through through the official channels for PTA, BTA, and the likes. So the CBN would have to look at this to ensure that it significantly supplies the segment of that market that would ordinarily have gone to the BDCs through the official window now. It's going to be a tricky one. It's going to be balancing act, but we do expect that the CBN is going to have to bring the BDCs back to the table.
Yeah, well, because I was going to ask you that, because I mean this is actually not the first time, anyways, that the BDCs have been.
Yeah, in 2016, the exact same thing happened. So we do expect that eventually the CBN will bring the BDCs back to the table. It is really about putting more controls in place in that segment of the market to ensure that utilization of funds is in line with the CBN directives.
All right, so given the outlook of inflation and growth, with considerations of the decision from the MPC, where do you see the monetary policy rate by year end?
I mean, for us, we've always we took the view of the MPC, or rather the statement by the MPC that they wanted to see the effects of the policies already put in place really permeate the economy. And we took that as face value. And given that and our expectations for growth, we forecast growth to settle at 2.63% year on year for the full year, while inflation should downtrend in the year, primarily due to the base effect. We're forecasting about 15.63% year on year by December. And I note again, it's primarily due to the base effect. We don't expect a significant change in the overall nominal level of prices in the market. But if you take into context where we expect growth at the end of the year, as well as the downtrend in inflation, we believe that the MPC may look at those factors or those macroeconomic indicators and then decide to make policy action at the last meeting for the year. The November meeting. At that meeting, we're expecting that the MPC will choose to increase the MPR by 50 basis points.
Okay, so so you're predicting that by the next one, which is in September, there will still be a whole decision? Is that what you're forecasting?
Yes.
Okay.
Yes, there will still be a whole, but we'll still need to see the effects permeate the economy, and growth figures may just be ramping up. So they want to see the growth and the inflation be in a positive trend, at least for one more meeting, which will see them past September.
Okay. All right. So we'll be looking forward to that. And then we'll see if your prediction comes true. Thank you so much, Jolomi Odoganro. Could you help me pronounce your name?
It's Odonhanro.
Odonhanro. Thank you so much for joining us this morning, Jolomi Odonhanro, for sharing your thoughts with us, and enjoy the rest of your day.
Same to you.
So we'll take a break now. When we come back, we'll head straight to the commodities market update. To join us then. You're welcome back. You're still watching Business Morning on Channels Television. Now, oil prices slipped but remain near $75 per barrel today as crude stockpiles in the United States, the world's top oil consumer, fell last week to their lowest since January 2020, and imports and production also dropped. Brent crude oil futures fell 5 cents to $74.69 a barrel, while U.S. West Texas Intermediate crude oil futures slipped by 4 cents to $72.35 a barrel. Crude inventories fell by 4.1 million barrels in the week to July 23rd, helped by lower imports and a decline in weekly production. Gasoline stocks also dropped, bringing them largely in line with pre-pandemic levels. Well, for more on the oil market and other commodities-related issues, we have Nosike Wajide. He's a research analyst with Financial Derivatives, and he joins us for the second time this week to discuss the commodities. Hi, Nosike, thank you so much for joining us.
Thank you for having me.
Good morning. So we see that oil slipped, and it's connected to the fall in the U.S. Stockpiles dropped in the U.S. What's happening there?
U.S. stockpile. The fall in U.S. stockpiles basically mean that oil consumption is picking up. Basically, your stockpiles, your inventory levels where you store the oil, and if it's depleting, it means that consumption it's rising basically. And compared to hasn't been this low since January 2020 before the pandemic, and countries had to shut down. The U.S. economy had to shut down. The U.S. economy is the largest consumer of oil globally, and obviously the things that consumption levels in the U.S. will affect global prices. We can see that it went above $75 per barrel, but slipped. That slip is obviously the concerns over rising COVID cases, especially with the Delta variant in the U.S. We had that in the past 2 weeks, cases of Delta variant specifically have risen by 144%. Right now, COVID cases, about 83% of all COVID cases are the Delta variant. Hospitalizations are on the rise, and the fatalities are also on the rise. So that, obviously, the oil markets will take that into consideration. It's taking that into consideration already. It's typically this time of the year, it's the summer driving season. But obviously, because of COVID, that impact hasn't really come into effect the way ordinarily would. It ordinarily would. The vaccinated people are going about their business.
Yeah, because I wanted to say that the impact of the Delta variant and third wave in Nigeria and some other number of waves in other countries is not as much as before. So it seems with more people getting vaccinated,
people economies are returning to normalization of things across much of the advanced world, because the deployment of vaccines has been much more in the advanced world than in the emerging markets or the not so developed parts of the world like Africa and places South America and Asia. But in America, where as much as about 50% of people have gotten 2 jabs of the vaccine, have been completely vaccinated in the EU and the US. So those countries are slowly returning to normal, even if there's a spike in COVID cases. The people who have been vaccinated are returning to their businesses. Restaurants are open. Outdoor activity is going. About stadiums, people are returning to stadiums. So sports activities, the economy is just slowly.
And that's actually what we saw in the UK too. You know, they had the Freedom Day, the July 19th.
Yes.
Yeah, and in spite of a spike in cases, they still went ahead with that. And
yes. So the vaccinations are crucial for a return of the global economy back to normal. If the economic recovery is going to happen as fast as it should, then more and more countries should do more to make sure that vaccines are deployed to the nooks and the crannies, to just people, so that people can outdoor activity. Without vaccinations, we cannot return to.
So that leaves, I mean, the developing countries down there, you know, waiting for
handouts. Handouts from
I didn't want to use the word.
You know,
because you're not into production and you're not even paying for it, so you're waiting for when it can get.
You are at the mercy of these advanced countries because obviously when they are done with their own vaccinations.
Obviously, you
and they
can't
look
love
towards
another person more than you love yourself.
Definitely not. So as soon as they're done with their vaccinations, then they can look towards the rest of the world, especially for the airline businesses to return to what it was this time 2 years ago. You will need vaccinations to take place globally, because as it is, there are still restrictions in place, even from the US and in the EU, where you have high levels of vaccinations. There are still restrictions in place for airlines, carriers taking non-US citizens to the US. They can leave the US, but non-US citizens coming to the US as it is. There's no metric as to what needs to be done for those restrictions to be taken off. So I think they're playing it safe and just making sure that the rest of the world attains very high levels of vaccinations before they can remove restrictions and everyone carry on as usual.
And I know in Nigeria, we don't hear anything about the restricting economic activities, because the last time we tried it, we did not have enough buffer.
We don't have enough buffers to support another lockdown. It's not even an option at this point. So you can see the supplementary budget had healthcare in it. So we would do as much, the government will do as much as it can to maybe get as many vaccines as it can. There's still a lot of people who are suspicious of the vaccine. So I think more needs to be done in terms of
highlights education.
Yes, educating and enlightening people as to the benefits of the vaccines. Look, if we have these vaccines, we can return to normal. The alternative is another lockdown, which we cannot afford. So more people need to be.
And yes, another alternative is actually local production of vaccine. I mean, like a lot of people have talked about, it's not just about starting from scratch to produce.
Yeah, obviously
if you have an international company come into a local pharmaceutical company, to begin production.
But I don't think that's something that could be done in the near term. That's something in the future. Okay, in the future, let's what are the modalities for this sort of thing? In the event of another global, it's not something we pray for. In the event of another global pandemic, and given the large population of Nigerians, can we have these big pharmaceuticals coming and produce vaccines for the local population? I mean, something that we plan.
All right, but anyway, at least the International Monetary Fund has retained its projection for Nigeria's economic growth prospect at 2.5. So in spite of the fact that we don't have enough vaccines or vaccination, there's still the retainment of this growth projection.
That's hinged on deepening economic reforms. There's reforms going on with policy, the petroleum industry bill. There's reforms in the exchange rate policy as well. There's also increase in, we have our oil quota, OPEC quota, increased to 1.8. That will go up gradually. And oil prices recovering to about 75. So it's all looking well and good. Now and into next year, where hopefully we'll have vaccines and we'll solve insecurity and hopefully take away the subsidies. The IMF themselves highlighted the impact of especially fuel subsidies. You take away fuel subsidies, you have enough funding to channel to infrastructure, for instance, where it's necessary to support businesses and lower the cost of doing business, improve the ease of doing business. And also external funding. Now that much of the forecast is predicated on external financing conditions continuing to remain favorable, so we can get a euro bond at favorable rates. We expect to have some IMF funding. Hopefully by the end of the year. If we can have that, it would improve forex liquidity. Obviously funding for infrastructure, like I've said. So those things are the forecast is predicated on these things. Hopefully,
you mentioned the PIB, which still has its ups and downs here.
Yes.
So we hope that actually scales through, because we thought we were done with the controversy and the delays.
Yeah, we thought we were done until the details of the bill came to fore, and there's some uproar about the host community.
The host community
wanting about 10% initially.
Yeah, 5. I think that's what they're asking for. Currently, there's 3%.
There's 3 and 5. I mean, the initial bill, then the bill was proposed, I mean, they were asking for 10%. Now it's down to 5 and 3, and then there's some people not entirely being happy with the amount being going to the to the Frontier Fund at a time when the world is slowly moving to renewable forms of energy. You want to channel as much as 30% of NNPC profits to the Frontier Fund. Some people are not happy with that. You know, you want to give 30% here, but you lower 10% to 3%. That's agitation. So it'll be interesting to see how that plays out.
And we wonder when that controversy will be resolved, because I mean we voted for this PIB bill for over 10 years now. Yes.
14 years.
And now we see another set off.
Yes, but hopefully, I mean, if since it's just down to the numbers, the PIB, the major thing with the PIB is the investment it was supposed to attract, the fiscal terms, that has been made clear. Or those the terms have been made clear, and I think that's already set, and that problem, those numbers have been set, so to speak. So the agitation now is the host communities and the Frontier Fund. I mean, if that is resolved, and it's more internal, that's resolved, then hopefully the bill can be signed into law, becomes an act, and becomes law, and then we can...
And then the subsidy will be off.
Yeah, subsidy will be off, and we know it will not be as easy as...
And then we'll start facing reality.
And the reality of... market forces determining the price of
the
fuel.
Price. I wonder if that day will come. Well, we also have the issue, I mean, one of the conditions that the IMF has considered is the increase in our crude production.
Okay.
But we have the challenge of crude thefts. Also facing our production.
Yeah, it's something that's something that some people say is here to stay. I mean, if you produce 1.8 million barrels a day, I mean, over the years we hear of a huge chunks, as much as 20% of that 1.8 million barrels a day is off. Or goes under the table. As there's 1.8 and there's another 20% of that is done illegally and refined in some makeshift refinery in the creeks, modular refinery in the creeks and sold. And it's something that you would need a lot more than just talk, and you need to properly, if you can make those modular, there's some mechanism for turning those modular refineries into bringing them mainstream. Then given that we want to completely deregulate the downstream sector, then that's something that should be at the forefront of their push towards
Okay, so both the IMF and the World Bank had warned that developing countries unable to afford the cost of vaccines could lag as the global economy recovers from the ruin. But we have the supplementary budget, I mean, like I discussed with Jolome in the first segment. Can the supplementary budget actually make a difference?
Well, given what it's targeted at, given the objective, healthcare and insecurity. Insecurity, for every investor, insecurity is obviously the number one thing you look at. If you see the capital importation, FDI is what creates jobs. FDI is just about 8%, about $77 million.
Yeah, FDI has gone down.
Down to 77 million.
Yeah.
So, I mean, you need to solve insecurity. For any investor anywhere who wants to send their monies to Nigeria, the primary thing is security. What's the security situation? If it's not good enough, then we stop. Or we put a hold on every investment decision that concerns Nigeria. So if you solve insecurity, domestically, we can begin to go out. Businesses, traders can go about their business. Investors overseas can say, okay, insecurity is solved. Let's invest in Nigeria. That's what will create jobs. So if you have a budget that's channeled towards tackling insecurity. That means procuring equipment, gathering intelligence,
we got the
training.
Tucano that just came in. I
mean, Tucano comes in. That's helpful for from air to ground bombing and all whatnot. But you need intelligence. Intelligence gathering in this day and age is the main thing. Because these bandits or criminals or terrorists also have their own intelligence. They probably have. I mean, let's talk about them having people within the government or within the military who send them information. So you need to do much more in terms of weeding out these people, ensuring that you are ahead of the terrorists and the bandits in terms of data gathering, knowing where they are, knowing what they are planning to do, where they're going, and equipment, in not just equipment, but training personnel as well. Let's talk about personnel not being trained for tackling banditry.
But
that sort of talk.
You know, sometimes when we talk about intelligence and dealing with insecurity, it doesn't seem like as a country we lack this intelligence. Like you said, these bandits and criminals may actually have some moles, Perhaps it's a matter of welfare and motivation, to make this intelligence and welcome.
Yeah, I mean, there's that aspect as well. I mean, all comes down to funding. You need to improve the welfare of the military personnel, of the police. Just fund the security agencies, welfare, equipment. Motivate them. Let them carry out their duties to the best of their abilities, and this insecurity will be solved. That's just what it is. And you can obviously there'll be some assistance from more advanced economies, their own intelligence gathering, their own equipment. You can also parley with the neighboring countries. Chad, at some point, the Chadian army had almost completely decimated Boko Haram from their end of their side of the border, and they ran to this side and have almost in Maiduguri or Borno, have able to carve out some local governments for themselves. So it just shows that we
even let that they hoisted their flag.
We didn't match the efforts of the Chadians at the time. So it's something that obviously funding is a way of tackling that problem if channeled correctly.
Well, another story that's making the rounds these days from Tuesday is the order or the decision by the CBN, not to sell FX to the BDCs. And today we see the Naira is hovering about 523, 522. And some people say this is one of the impacts and that it's going to get even worse.
Yeah, it's deja vu. I mean, it's happened in 2016, something very similar happened. There was a discontinuation of sales to BDCs and there was a depreciation of the currency at the parallel market. It's something that we expected. The one thing that may be different from what happened in 2016 is I think the CBN expects that there's going to be an increase in the supply of foreign exchange. Now, from higher oil prices, higher oil production, maybe some external funding, we'll have an increase in forex inflows. And something even more crucial is that right now, what's supposed to go to the BDCs is going to the commercial banks.
Yes.
Are there modalities in place to ensure that those banks are able to supply forex to those who need it, the same way the BDCs would? Because BDC is targeted towards retail investors. They're supposed to sell each BDC is supposed to be about $5,000 a day, but we know they did much more. So are there modalities in place to ensure that these commercial banks are able to push out these forex, these dollars or foreign exchange to those who need it as quickly as they need it? Because one of the biggest problems is when you're unable to get the forex as quickly as you want it, that you resort to the parallel market. If you're not able to get as much as you want, you go to the parallel market. So there's that demand in the parallel market. And the documentation is rather burdensome.
It is.
It's very rigorous. So some people just don't want the hassle and go to the parallel market. So that demand is almost constant. Just that, okay, if they can just speed up the process. Can I apply for forex and get it today, tomorrow? Is it possible? If you shorten the process, then you can. And if you signal to the market that there's increased, if you intervene in the market, say that you supply 200-300 million on a weekly basis, and the market is sure that's getting the supply, then maybe we won't see the parallel market depreciates to maybe the 550 that some people are projecting. But we know that this, in the short term, there's going to be some depreciation.
Well, I mean, in all of this, it's not like the BDCs are out of the picture.
No,
where are they supposed to get their supply from now?
There are other sources, but obviously, people who come into Nigeria from wherever and sell. Obviously, if the market rate is a 410, 411, and the BDC guy is buying from you at 520 or 517, it's a no-brainer that you would sell to him. Of course. It's a no-brainer. So that market will always exist. It's not just going to be supplied by the CBN any longer.
All right, so talk us through the price developments in the global commodities market.
Well, global commodities, at the moment, we're seeing wheat prices rise, and that's because of increased demand. And one thing you have to note, wheat is one of Nigeria's major agric imports. And wheat is on the CBN's, one of the 44 items, 44 items have been banned from forex not being allocated for the imports of these commodities. So if you have your parallel market rate rising to 525, it means wheat imports are going to become, not just wheat imports, but every agri commodity that we import is going to be more expensive, which would feed into basically food inflation forecast. And we expect the expectation or the forecast is that in Q3, inflation will continue to decline because it's the harvest season. So now that we have that harvest season, the increase in output, increase in agri products, agri outputs from the harvest season, we also have an increase in price from imported agri money. So that tapering of prices may not.
So how come inflation will go down and yet prices will be
we're not sure that
inflation
won't fall as quickly as we had expected.
Okay, because of partly because of
the
this
imported inflation.
All right, well, thank you so much for sharing your thoughts with us, Nosike. Always a pleasure having you on the show.
Always a pleasure being here. Thank you.
Yeah, and enjoy the rest of your day.
You too.
Okay, so we'll take a break now, and Business Morning continues right after that. Stay with us. You're welcome back. Well, we head to London now, where the Global Education Summit has been on since yesterday. It ends today. And, of course, we have Juliana to bring us up to date on what's going on there. Hello, Juliana. Good morning.
Hi, Annie. Good morning. You can hear me?
Yes. So major world leaders have gathered in London for the Global Education Summit. I know you'll be there all day long, bringing us up to date. But what's the event about and what has been happening?
Okay, great. So this is an absolutely huge gathering in London today. We've got world leaders, heads of state. We've had the Foreign Secretary, Dominic Raab, opening the proceedings on behalf of Prime Minister Boris Johnson. And it's all about education. We know that children have been pretty much the hidden story of the issues that we've had when it pertains to COVID-19. And the Global Partnership for Education have been running a campaign called Raise Your Hand with an ambition to raise over $5 billion to help the less privileged, and not just in low-income countries. Children have been affected from across the world. So we've got lots of people speaking today.
All right, go ahead, Juliana. I can hear you, yes.
You can hear me clearly, yes.
Yes,
so we've got
I can hear you.
People speaking from across the world today, including the World Health Organization chief who's just been speaking. We're also expecting President Uhuru Kenyatta and, of course, Nigeria President Muhammadu Buhari, who I believe is due to arrive any moment now.
Okay, so we know that President Buhari is supposed to address the audience later. Any idea what he's likely to say? Has he met with Prime Minister Boris Johnson yet?
Well, we know that President Muhammadu Buhari, as well as the foreign minister, will be having a behind-the-scenes bilateral discussion with Prime Minister Boris Johnson. I believe the last time that this took place was during the Africa Investment Summit. And then, of course, we all went into a lockdown. So they are due to speak later today. Hopefully, we'll be speaking with the foreign minister to get an update from that. And in the afternoon, I am informed that the president will be speaking on a platform with other world leaders about the way forward for education in Nigeria, which we know has been plagued with insecurity, poor infrastructure. So if anybody needs to be here and talk about a way forward for education, particularly the plight of young girls, it is the Nigerian president. So we'll be giving you an update on that.
Certainly, we'll certainly be looking forward to that, Juliana, especially when you talk about the issue of insecurity in the education sector, which has been a challenge for some time now. Thank you so much, Juliana. And I know you have a lot of activities to cover. 1:30, we'll hook up with you again for updates from the summit.
Thank you. Thank you, Winnie.
So let's go over to the markets now. We have Will. And Will, yesterday the market lost about 6 billion naira.
Yes, as you said, trading in the local bourse was bearish yesterday. As sell-offs in Fuga's stocks pulled back the market, we have Zenith Bank, First Bank, Access Bank, and also UBA declining yesterday, and the banking index was down by 0.96%. The NGX benchmark index declined marginally by 0.03% to close at 38,791.03 points due to the profit taking I mentioned earlier. We now see a moderation, however, in the month-to-date gain to about 2.3%, while the year-to-date loss stood at 3.67%. Total volume of trades yesterday declined by about 2.3% to 237.51 million units, while valued at 1.88 billion naira and exchanging over 4,000 deals. Rwanda was the most traded stock by volume at 44.29 million units. That stock has been trading hot since its resolution with the SEC, while the Zenith Bank topped the value chart. On the sectoral chart, we see we see mixed performance there. Sell-offs in Zenith Bank, First Bank, UBA, like I mentioned, drove the decline in the banking index. The industrial goods index remained unchanged for the second consecutive day there. This is not unusual because there's been no activity in Dangote Cement. Boa Cement has been quite silent in that sector. Its components have not been doing so well. We don't know what's happening there. But measured by market breadth, market sentiment was also negative. We have David Adonri, a stockbroker, to give us a broader perspective. Good morning, David.
Thank you. Good morning. Happy to be with you today.
David, it's good to have you. But we've seen a decline in the banking sector, down 0.96%. We're wondering what's happening there. Is it profit taking by investors, or people are just trying to dump the stocks? What's happening?
Yes, it's a combination of all those factors. Perhaps to a little extent profit taking. But there was an information that hit the market early in the week that some banks were troubled, which eventually elicited a reaction from the CBN after the NTC meeting, dispelling any rumor that the banking sector was in a little stress. The CBN said that all the banks were sound, but that they were not free to intervene in any bank that showed any sign of distress. So that may have caused some anxiety in the market, perhaps making some investors to shed some weight in the banking sector or realign their portfolio and move to some other sectors. So that precisely may be what happened in the banking sector. And again, some of the banks did not measure up to the expectations that were expected in the performance for Q2. I think one of the banks, I think is FCMB, actually did not meet the profit forecast. So that also affected the investors' confidence in the banking sector. And to capital, perhaps there was a negative reaction to the action taken by NTC on zero to change. But I think that action is much in favor of banks because what the CBN was allocating to BDCs will now be shifted to banks, indicating therefore that it should impact positively on the earnings of banks. But some people may have misinterpreted it that there is an assault on the financial stability in general, which is actually erroneous. But by and large, the market is moving forward.
Okay.
With a very bright prospects ahead.
Oh, that's great to know. Thank you so much, David, for your insight. That's David Adonri, stockbroker at High Cap Securities. Flipping over to the unlisted market, we see that the all-share index, the NSI index, was down marginally by 0.08%, and the market cap was at 655.54 billion naira. And the volume and value traded was 4.72 million units. Value was at 102.06 million naira, and all traded in 32 deals. The drop in the value represented about 73% drop there. And Clearing Securities Limited was the leading position, kept its leading position. Its share price rose by 7.83%, closed yesterday's trading session. And the fixed income market trading in bonds was mixed. We saw the average yield drop by 1 basis point to 12%. So, that's what we have for the market today. We're hoping for
yes,
better
I would have loved to know the impact of the MPC's decision on the market, but I'm sure we can face that tomorrow, hear about that tomorrow. Thank you so much, Will.
Thank you, Rini.
And that's where we also say it's a wrap on the program today. Thank you so much for watching. Do remember to join us at 1:30. 1:30, we'll have business and corporate, and we'll bring you latest development from the world of business. That's it for now. I'm Ini John Mekwa.
And I'm Will Ebang. Thanks for watching.